Time for the morning trade, and we're looking at Chipotle, which reports its earnings next week. Overall, it seems to be doing quite well as far as the analysts are concerned. They think that sales could give it a boost going forward. Let's see. Marley Kayden, host here on Schwab Network, has been combing through the details all about Chipotle. Tell us the latest.
Good morning, Nicole. Yes, you said analysts are favoring Chipotle. They did just get an upgrade from BMO Capital this morning to outperform, also raise their price target up to $65 from $56. It's important to note, though, that is on better outlook for the second half of the year. They specifically say in the note it is not based on their expectations for second quarter earnings, where they do expect to see another quarter of comp declines and margin compressions. They add, though, in this note that should be generally in line with the consensus and that it should not surprise investors. So they are not expecting a big downward move if that happens. And they believe Chipotle is well positioned for accelerating comp growth and improving margins beginning in the second half of 25. Yesterday, Stevens also raised the firm's price target on Chipotle as well. That's up to $60 from $49. They kept an equal rate rating on the shares, saying that they believe sentiment regarding restaurants is more optimistic exiting Q2 compared to the beginning of the quarter. So the same argument there. It's really about the second half of the year as opposed to those earnings that we're going to get next Wednesday. While we're talking about those earnings, EPS expected to come in at 32 cents. That would mark an almost 6% decline year over year. Revenue expected to come in just over $3 billion, which would be down about 4%. But Chipotle does have an impressive record of surpassing earnings expectations, Nicole. Its earnings has beat the consensus mark in all four of the last quarters by an average of 9.2%. Last quarter was one of his smallest beats, only 3.6%, but the last four quarters it has beat every single time.
That's pretty much great news. I mean, we've seen the stock split. We've seen the enthusiasm around this name. I mean, Cava came in with something similar but different. But the footprint of Chipotle is still huge compared to some of the other fast casual restaurants. I mean, there's so many Chipotles. You can't compare it to something like Cava, which actually has had a pretty tough time. I mean, it's down 25% in 6 months.
Yeah, you know, and as you look at Chipotle over the same period, down just a little over 6% in the last 6 months. On the last month, up 4%. And, you know, a big distinction, too, you mentioned Chipotle having a lot more stores than someone like Cava, but also Chipotle has driven a lot into their expansion efforts and also their marketing initiatives. They've really tried to increase their visibility in a lot of different ways. I don't know if you've seen it, Nicole, but on social right now, they've got a partnership with Wonder Skin called Lipotle. They did a Chipotle themed permanent lip stain. So I mean, really doing a lot to bring in new customers, different customers than they usually have, because one of their big issues, one of the big expectations is that soft comparable restaurant sales are likely going to hurt the company's top line because they're having lower transactions for the second quarter. That's the expectation.
And I mean, finally, you need people to have jobs and feel like they're ready to spend. And we're seeing some solid news, everything from retail sales and jobless claims, even the sentiment print today. You know, I will say I've had guests on who said people will cut back on dining out, or maybe how much they spend when they're dining out. But you need this consumer to stay alive.
Yeah, you most certainly do. You know, and you mentioned that people have to have jobs to eat, you know, at a place like Chipotle. But Chipotle also has to pay those workers, you know, with the inflationary uptick as well and rising minimum wage. So the elevated wage and commodity inflation likely going to negatively impact their bottom line as well here for the second quarter. The company's projecting labor costs to be in the mid 24% range with wage inflation in the low single digits. So, you know, that's another potential driver for Q2. But overall, analysts favorable for the long-term outlook for Chipotle for the rest of the year.
All right, Marley Kayden, thank you so much. It's great to see you. Good luck there and preview of Chipotle. Dan Deming is with us, managing partner at KKM Financial. Dan, you're looking at this Chipotle stock, and you have some example trade for us that you could share with us. I want to hear more about that, please.
Sure. Yeah, absolutely. So, yeah, going into this earnings announcement, you know, it does look like it's well positioned to potentially capture further upside and maybe take out those highs. that we did see in early July, up around 58. But at the same time, I think there's still potential risk here, as Marley pointed out. Some of the metrics underneath the surface are not necessarily trending in the right direction, at least short term. So today's trade example is to capture upside, but define the risk to the downside. So I'm looking at an August call spread. So this will be inside of the earnings announcement next week, but give you a little extra time. And I'm looking at the 55.62 call spread in August, regular expiration. You can put that on for about $1.70 right here. And that allows you to capture upside if we see a breakout, and particularly if you see a break above that 58 level, which I think then would push us over that 60 handle. But once again, if there's some disappointment, define the risk to the downside, I think is also a key element in the earnings announcement coming out next week.
I mean, overall, how are you feeling about the market here?
Impressive. It continues to. I mean, the data's basically defining the price action in the market. I mean, we've got some really positive data the last several weeks, particularly on the inflation front. And now with some of the consumer sentiment numbers continuing to show signs of strength. I mean, I think you coined it perfectly, as you said that short-term pain for long-term gain. And I think to some degree we're seeing that unfold. Now, will it last? It's anybody's guess, but there's no question based on the metrics in the market as far as economic activity, the inflation front, and earnings so far that they've all been positive, and that's why we're at all-time highs in most of the major indices.
Understood. I mean, when you think about what for example, Ahmed Rizko was on and he said sort of the tariffs are in the background now and we're looking to some of the trends. And he noted AI, he noted a revival in manufacturing, and that many of the guests that have come on this week, most have been with targets higher than where we are now by the end of the year.
Yeah, I mean, I think there's still going to be a little fits and starts here. I mean, we're not going to get out of this year cleanly, but that's to be expected. I think that, we're heading into a period here, late July, early August, where the market typically shows some weakness. But you'd have to say, based on the trends, and if we do see the Fed start to cut, if inflation continues to moderate, now the outlier would be the labor market, which is still remaining very strong. So that's the push-pull mechanism for the Fed right now. But those are good problems to have. And overall, the trends appear to favor further increase in the market valuations. But again, I mean, there's still some obstacles to clear. And I think one thing short-term, Nicole, the sentiment in the market is certainly getting very frothy to the bullish side.
Okay. Dan Deming, Managing Partner, KKM Financial. Dan, always great to see you. Have a wonderful Friday. Thank you so much.